Good evening, everyone. Today we'll cover ETF. So, broadly, we'll cover ETF. Main thing is what is ETF and what are the types of ETF and why ETFs are best way to invest and how to invest in ETF and what are the top ETFs we can bet on. So, first thing to begin with, we'll start with what is ETF. ETF is nothing but an exchange traded funds. So where if you it's a basket of stocks. Instead of investing in one stock, they'll already predefined basket where professionals will create the stocks and they'll create an ETF. So, for example, if you want to invest in any one of the IT stocks, so you do not have the good knowledge to invest in because if you select one particular stock which might give good results at the same time it has the probability of going down also is high. So instead of that, if you want to invest in multiple stock of assets within one click, so you can opt for an ETF. It is a pre-built exchange traded funds. So in one click you can invest in ETF. This is the brief about the ETF, how ETF is created. And the second thing, what are the classes of ETFs? So mainly ETFs are created based on the index, broad index funds and sectorial index funds. Say broad index funds, if I say Nifty 50, Nifty Next 50, they'll directly invest in Nifty 50 stocks. In it's a one consolidated instrument where you can in one click you can buy. So thematic, say if you want to invest in artificial intelligence, semiconductors, they'll create based on only they'll invest in artificial intelligence and semiconductors or defense sectors. They'll create predefined and they'll let it traded in the exchange. And third one is why ETFs are best. So for beginner to begin with, if you do not have any deep analysis of how market works, how individual stocks works, so you can opt for an ETF because it is well diversified. One thing, best thing is it is well diversified. They will invest in multiple class of assets, and you will have the and expense ratio is very less compared to the mutual funds. Expense ratio is very less. And the third one is the liquidity and accessibility. Liquidity, it has a high liquidity and you can enter and exit during trading hours at any time. So these are the few main advantages of an ETF compared to the mutual funds. And what are the best ETFs we can invest in current days, in the recent days? So I have the screener of ETFs. So we'll analyze few of the ETFs, how they have performed in the recent days, and we'll get to know how these are ETFs are working. So mainly I will sort this by 1 year return. So if you see which ETF are given the good return. So this ETF, this is called Mirai Asset NYSE. NYSE is nothing but New York Stock Exchange. They will invest in the US stocks. So this is uh, as you know, we cannot directly invest in the US stocks, but through ETFs we can invest indirectly in the US stocks. So this is the one which had given the good return of 69%. If you see overall return, it's a recent good return because if you invest only in Indian stocks, uh, it might you might be in the negative returns in the last 6 months. But if you opt for these ETFs, it has given the almost all every in every class of time interval, it has given the positive return. Similarly, Hang Seng Tech also given positive, S&P 500, Motilal Oswal Nasdaq also given, and gold ETF. So in ETF, they don't only invest in the stocks; they also invest in commodities like gold, silver, crude oil. So one of these UTF, UTA Gold ETF, their primary their benchmark index is gold. So which is also given the good return. So similarly, like say around there are in the as of now around 200 ETFs are available. So we have to be very choosy in picking the ETFs because in sometimes ETFs also gives a negative return. See, if you see this ETF, Nifty 10 year benchmark GSEC, this is a gold bond, GSEC, government bond, and this mid cap small, this gave a negative return. Few we have to be very choosy in picking the ETF also because some of the ETFs also gives the negative return, but compared to the equity individual stock, nothing. I mean, see if you see maximum drawdown of 8% or 8 or 11 to 12%. Sometimes stocks even goes 30%, 50% negative return. But ETFs are not like that. ETFs will give you the good upside, potential upside, and drawdown is very minimal compared to the directly investing in equity stocks. So one more advantage is ETF expense ratio. Whenever you are going for any of the equity ETFs, you have to watch out for the equity expense ratio, because this is the expense ratio where they will deduct this from your returns. So this is in terms of comparing to the mutual fund, which is almost 50% less. If you directly invest in mutual fund, this will be around 1 to 1.2%. The biggest advantages in ETF is the expense ratio. It is compared to the mutual fund is very less. So now how to invest in ETF? It is very simple. Through your broker, you log into your broker and select any ETF and swipe to buy. You will directly get it to into your account. Unlike mutual fund where you have to invest through professionals or through mutual fund house, this is directly available in your broker platform, and you can pick and choose, and it is very liquid, and you can exit at any point of time. In the mutual fund, what happens, you have to wait for end of the day to get the NAV and decide to whether to exit or to enter. Even if you exit the to get credit, it will take 2 to 3 days. Not ETFs are not like that. It is very quick, and immediately you will get the credit into your bank account. And you can it's the biggest advantage is it is whenever you want you can enter, and whenever you don't want you can quickly exit these ETFs. So this is the analysis of ETF today. Thank you for watching. We'll see you in the next video.